this very special conversation. I think undoubtedly stock of the day, company of the day, and the management of the day that everyone wants to hear is Urban Company. What a rock star debut this listing has had. Nearly 60% up. Yeah, there you go. But 63% up on the stock price right now from the listing debut. Now, of course, a lot of questions that investors would have, those who have FOMO if they didn't get the allotment, and what the path ahead is. We have exclusively in our studios, Team Urban Company. Abhiraj Bahl is with us, CMD and CEO. Varun Khaitan, the ED and COO, and of course, Raghav Chandra, ED and CTPO. All with us in the studios. Welcome, guys. Congratulations on a stellar debut. All of you much, much richer this afternoon than you were earlier this morning. I'm going to start by asking, what's the first big thing you're going to spend on?
Thank you. Pleasure to be here, Tamanna. I can't answer. Do you guys have something in mind?
A meal.
Yeah, I think we need a good meal. Yeah.
I was thinking the same.
We have
take the family out
right here, which will give you a 6-course meal.
That's excellent. No, I mean, I think it has been, I think, a dream debut in that sense. But with the dream debut, the expectations also grow manifold now. You can expect a lot of scrutiny in all of your quarterly numbers, etc. So let me start with those basics as well. What is the vision here on now that this capital has been raised? Abhiraj, I'll start with you.
Tamanna, I think it's not lost on us that the success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break-even last year, less than 1% of the entire home services industry. And, you know, the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help, you know, hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable. So we have our work cut off. I think we'll take a bit of break today, but be back on the drawing board tomorrow, and you know, the journey continues. It's a milestone in a long journey.
Yeah, and to add to this, you know, the key from here on, to take it from where you left right now, is the journey continues. And I think that's what investors want to know. What is the path going to look like? Because after achieving break-even last year, the key is sustenance. And from sustenance, it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think for us, we have 3-4 segments of business. Our core services business in India, which is today at scale and profitable. Our goal will be to continue to grow it well at a healthy clip, continue to grow it profitably, and continue to invest behind the pillars of training, quality, technology. Then we have certain relatively newer businesses, I would call them, starting with Native, InstaHelp, and also our international footprint. Those are today not profitable, but again, our goal will be to keep investing in them and set them up for a successful future. I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay. Let's talk a bit about the numbers. Varun, I'll come to you on this. You're, of course, EBITDA break-even. Do you see that pathway sustainable is the first question. And then what is the margin picture looking like going forward?
As Abhiraj mentioned, the 4 different parts of our business are at different stages of maturity. And we are going to continue to invest in the right pillars for each of these businesses: India Services, native, InstaHelp, and international. And in the subsequent quarters to come, every time we will attempt to give clear disclosures on where we think the profitability and margins are heading.
No, but is this current profitability sustainable is the question. Do you think that next quarter we see that as well?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value. And in the first quarter, we did about 4%. And in that quarter, we had not segregated InstaHelp away from the core business, but we did disclose in our RHP that had it not been for InstaHelp, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability. And I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. I think the other segments, whether it's native or InstaHelp or even international, it's honestly a bit early for us to talk about profitability.
What is the revenue split? You mentioned the 4 segments. If you can just get an idea. Your new company, I think there is a process of discovery also for investors. So in terms of the 4 verticals, what is the revenue contribution?
So FY25, InstaHelp was, just started towards the end, so it continues to be very, very small. But FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from native.
So when you talk about the 13 and the 10, which is 23% of your revenues are loss-making, let's put it that way, right? If you have to look at both of these breaking even from here on, what is the kind of timeline that you're looking at? And when do all engines actually steam up and start firing, according to you? And what would that growth then look like?
Yeah. So if we look at international and native both, particularly international has seen a trajectory of improving revenues and reducing losses. And they've been sustainably coming down. And even in the first quarter, we reported a material reduction in losses as revenues continue to go up. Our international footprint has a very similar, I would say, adjusted EBITDA margin profile and contribution profile as India. Probably a little behind India in terms of maturity, but it will sort of eventually get there. Native is still early. It's yet to complete its second birthday as a sub-brand. I think we will want to invest further. What we are looking to do is, in the first or the second earnings call itself, come out with very clear guidance. We understand that 23% of the business today is unprofitable. Investors will want to know how long will you continue to invest behind them, and what is the capital that you will want to deploy before these break even and start generating cash. I think in the first or latest the second earnings call, most likely we'll try to get there in the first. We'll come out with that disclosure.
And I think to that, I think it's going to be Raghav who's going to be asking you to make all the spends as well, right? So Raghav, coming to you on that front, if you're talking about India business which is matured, I'm sure there is not too much of development that goes in from a cost perspective. You're talking about native and international where the markets are pretty much at a nascent stage from a business perspective. A lot of development that will have to happen there. Are you seeing that aspect happen from a product and technology perspective as well? Or is it just going to be an operations angle to it? Because then it'll come back to Varun then.
Absolutely. So how we work has a lot to do with how our tech engines are configured. That's what allows us to scale. We're in a place where launching new cities or new categories, once the playbook is cracked, we don't need to keep rewiring. So, internally teams are kept into focusing for advancing versus just running operations. So yes, international, native, or even India bets, all of this kind of require tech at its core to codify insights, allow them to scale. And that's basically how we work internally.
Just give us a sense of what is the consumer behavior you're seeing in terms of repeat customers, stickiness of the business, average spends, and what is the trajectory there? Anyone who wants to take that?
we've disclosed over the years, even though the new users on the platform are growing, even then the share of business that we get from our older repeat users, the percentage share, has also been growing. And that is because once users get familiar with the idea of Urban Company app and the fact that it serves a variety of their needs and use cases, we see that users keep trying newer categories on the platform, and thus their spends on the platform every year on average keeps going up. And that going up along with the addition of more new users creates this growth engine that we've been seeing compounding returns from.
Any
Even as we
numbers you can
do
share
new
in
things,
terms of percentage of users which come
absolutely.
back?
So I think in FY25, 82% of our net transaction value came from repeat users, users who were acquired prior. First quarter of FY26, that number was north of 85%. And historically, it's been coming up. I think it was early 70s in FY22, 23, went to mid 70s in 24, shot up to above 80. And one of the things that Varun pointed out, which we've also disclosed in the RHP, is if you see in the first year, the average user is only trying about 1.5 super categories. I think 1.3 on average. So Urban Company, when they start out, it represents an app from where I get a haircut or an app from where I get a plumbing done, repair done. It represents one thing. Over time, that trust compounds. Then they'll try a second service and they'll realize, okay, it's not just for haircuts, I can use it for this as well. The third category becomes easier than the second, the fourth becomes easier than the third. That trust starts to compound, and before you know it, the user starts to think of Urban Company as an end-to-end home services platform for them rather than just one or two use cases. This trust compounding journey takes some time. It takes a few years for them to try 4 or 5 different services over time. But once it does, it really creates a powerful, sticky, repeat base and a strong network effect for our platform.
So what is the average customer acquisition cost right now? Are you seeing a particular trend that is emerging where it's now starting to inch lower, or does it continue to remain sticky and high?
Yeah, I think without getting into the specific numbers, what I can share is that it has been steadily dropping for us while the new user count has been going up. And part of the reason is that we operate, people think that we operate in cities, which is true, but we actually break cities into micro markets, smaller units. And in each micro market, as we densify, our service professionals get utilized better. Last year, the average professional was only utilized for about 83 hours in a month. That was the average. But we've seen in dense micro markets that number go up to 125, 140, even 150 hours, which represents taking the utilization from about 40-45% to about 70-75%. Now, utilization is the fundamental cost to serve in our business. It's the systemic cost, which as it comes down, service professionals earn more. They are spending less time traveling between jobs or waiting for jobs. They're spending more time inside consumer homes, so they can earn more. And consequently, as the cost to serve comes down, customers can get better pricing. And with that, our CACs also reduce.
What about your average transaction value? What is the average spend that customers have? Or is that a difficult metric for you because the services are so different versus other platform companies?
No, it's a very broad segment, right? Something like an Insta Help today, which we are fast accelerating, could be for as little as a couple of ₹100, all the way to, now we have painting and wall paneling services, which are running in the tens of thousands. Most of the medium services, whether it's a beauty treatment, haircut, a simple plumbing, electrical job or cleaning, are, I would say anywhere from ₹500 all the way to about ₹2,000 or so. That's the spread.
But are you seeing that spend go up, or the propensity of that to go up?
The spend is, in terms of the total number of transactions that users are doing, it's definitely increasing. In terms of the spend per service, our endeavor with increasing densification is actually not to take the pricing up, but actually offer better pricing to consumers.
I think you have a business model where you do have two aspects, where you have, I think, premium and luxury, if I'm not mistaken, right? What is the margin profile of each, and do you see that shift from premium to luxury happening quickly when you're taking, when a user is taking services? That's number one. And number two, the retention of the service providers also becomes key, right? because your business model is dependent on the service providers. How do you make sure that they are sticking around with an urban company and not going to anyone else?
You want to take the question on premium?
We've actually been always positively surprised by the uptake of the top luxury tier segment whenever we've launched it. Today we've launched it across beauty services for women, grooming services for men, and our massage and spa categories. And every time we launch it, the fast adoption of users surprises us. These start off with users who have been using the platform for some time, who experiment, realize that there is a real upgrade in the products that are getting used, in the service levels that are being offered, and then they feel like they made the right choice to upgrade and continue to repeat in that luxury tier. And while we do not just this, but also what Abhiraj spoke, which is for the same service, we want to keep our prices same or reduce it with density. We do this always while holding true to the value of win-win on our platform, which is we need to take our service professionals along in this journey, and their incomes need to keep gradually going up every year.
So what's the
And that's
commission model for
largely,
them?
I'll come to that.
Yeah.
That's largely driven by their utilization increasing with every year, both because there is higher density of demand and professionals realize that it's a very meritocratic platform. Their earnings depend on the hours that they give, and we keep guiding them on how to spend their time best and keep increasing their earnings.
Yeah, and coming to the commission model, how does that pan out?
Yeah. So the commission model is quite simple. I mean, while commission rates vary category to category, I think a rule of thumb you can say is that a fourth is kept by us, and 3/4 goes to the professionals.
Okay.
And so the more they work, the more money they make, the better they get utilized. And beyond the money, the monetary aspect, there are some non-monetary aspects also that we offer. So every professional on our platform, regardless of how many orders they do, get access to a free life, accidental and health insurance cover. Some of our best professionals also get access to free family health insurance that covers their spouse and 2 kids. They get access to formal credit at subsidized rates. There's free training for everybody and certification program. We're helping our women partners now with a project called Project Udaan, where we want all of them to have a mobility 2-wheeler solution. We've realized that a 2-wheeler owned by a woman partner increases their sense of confidence, their sense of safety, and their earnings go up by about 15 to 20%. We did this study with UC Berkeley. So I think we're quite committed to the goodwill of professionals. And as you rightly said, it's not out of charity that we're doing this. It makes complete business sense for us. Happy partners for us leads to happy consumers. And that's why we have to continue to invest behind their happiness so that we can retain them and they in turn can make our customers happy.
Okay.
Absolutely.
Very interesting company, very interesting business model, and what a stellar debut. Also very nice to see, young entrepreneurs there making that leap. That's something that we talk about when we talk about a growing India and a new India. Thank you so much, and congratulations, Team Urban Company. Thank you for coming into the NDTV Profit Studios.
Thank you. Thank you so
Very
much.
much looking forward to using Urban Company and seeing what it has to offer
And
to all
speaking
of
to you
us.
at the next quarterly results, when the numbers come out. All right, we'll take a very short break on this special program, but we're coming right back with all the latest on markets and tell you about the stocks that are buzzing. Stay tuned.